seems that emerging market banks seem to be a lot more attractive than banks in Western economies for obvious reasons, and especially in Asia, we're seeing a lot of movement into Asian bonds. What's motivating all of this?
I think it's really a view of where future growth is going to be. If you look at, as you said, Western banks, there's this whole theme of deleveraging taking place. The consumer in most Western countries, the US, Europe, is over-borrowed, over-leveraged. Debt to GDP in those levels is extremely high levels. So future growth in terms of bank lending is not going to be there. It's really in the underdeveloped banking markets of Latin America, Asia, and Africa, where, if you're a banker, those are the markets that you're going to see growth for the next 10, 20 years.
Now, we know that within the BRIC economy rubric, Brazil, Russia, India, and China, those economies will constitute 60% of global growth by the year 2015. But within the rest of the spectrum of emerging markets economies, the reputation is that debtors are high risk and volatile, and that the risk of default still remains high in emerging markets. How do investors get around that?
Yeah, look, how do these markets develop? It obviously starts with the first people who are prepared to go in there and lend. At the end of the day, the reputation for risk, I think, in a lot of those markets is overstated. Arguably, some of the risk it's not so much the propensity to repay, it's more an issue of political risk, and that's still prevalent. You only need to see what's happening in Thailand. But one needs to be, careful about the markets you go into, and it's also about those markets growing and emerging. In many markets, emerging markets, for example, there's no property deeds register, so the ability to do mortgage lending is limited. But as those markets emerge, as they start to develop, the ability for a bank to come in and lend successfully is quite high. And we've seen in a number of emerging markets, some of these unsecured or micro lenders, they actually have a better repayment record, certainly, than for subprime.
Now, we know that banks in China and Brazil and Russia in particularly epitomize the success of emerging market banks. By profits, the Chinese banks in the tier 1 capital, dividends and market value accounts for about 25% to 50% of the global banking industry collectively. But we are also seeing concerns about the threat of asset bubbles in countries like China, and we've also seen the China Central Bank and the Chinese authority calling on their banks to manage their liquidity ratios a lot better and to ensure that they are better capitalized in terms of reserves.
Yeah, look, without a doubt, it's these sectors are still not without risks. China in particular, there's been a lot of directed lending. You may be aware, the majority of the large Chinese banks are still state-owned, and as a result, you've seen directed lending into certain regions. So it's, one still needs to do one's homework and understand, which are the right areas, and make sure you aren't paying, too high a price to enter. But at the end of the day, it's around seeing where there's potential growth, where, debt to GDP in a number of these countries is, in the 20, 30%, as opposed to the 110, 120%. So it's about finding the right banks in those regions, making sure that you find one with a clean balance sheet, one that hasn't been forced to lend in particular areas. And trying to find really the big opportunity in these markets is addressing the consumer. It's not about corporate banking. It's about finding those really that have the successful formula of reaching the retail man in the street.
But it's also about managing the bank's strategic objectives and managing the expectations of the government in an economy like China, where there is that directed lending regulatory framework. How do investors feel about that, where the heavy hand of the state continues to interfere with the operations of the institution?
Look, obviously from a long-term perspective, I think it's unsustainable. Clearly it's worked for China in the short term. It's enabled them to arguably ride through this volatility a lot better than elsewhere, where they've needed to deal with CEOs, etc., separately, independently, try to persuade them. So the directed kind of lending, or the immediate impact of having the state push the banks around in the short term help. But longer term, clearly with the state controlling them, you end up with inefficient allocation of resources. And longer term, I think at the moment, short term, people are getting caught up by this kind of dreams of huge growth. But having the state run the banks in the long term will be inefficient for the allocation of resources, and either things will change, or else you'll end up with difficulty in those banks later on, because they'll end up with big non-performing loan books.
I want to continue on this tack. I'm going to bring Sasha Narishkin into the conversation. The Central Bank of China calling for higher reserve margins for banks, tighter regulation. If you had to do a risk profile of emerging market banks and looking at the environment in China, which is so lucrative and yet so regulated, what would you say?
Yeah, again, China's unique because remember that the central authorities are the ones who set the rules, and they work quite closely with the central bank, whereas in most other big economies, and I think it's unfair to call China an emerging market anymore, simply because of its size and scale, because of the very rapid development that we've seen there. I mean, I would guess anyone could make up their mind over what's going to happen over the next 10 years, but you're right. You're dead right. They're going to meet some sort of stumbling block sooner rather than later if private capital isn't in charge of these banks.
Now, Neville, we know that in the last week there have been lots of rumours about a possible takeover of Nedbank or Nedbank partnering with a foreign bank, and who should that bank be? Looking at growth within emerging markets and some of the challenges within Western markets, if you were to advise a Nedbank, if they were up for sale, who should they be partnering up with? The Asians, the West, or the East?
Yeah. No, look, I mean, without a doubt, I think anyone who's really got long-term growth, prospects, they should be looking east. Western banks at the moment are still trying to deal with the legacy issues. They're still trying to get out of the mess that they got into. And with a couple of exceptions, and I mean, the one that's rumoured, obviously Standard Chartered, it's more of an East bank than a Western bank, even though it's listed in London. Most of these banks should be looking east, not specifically to take ownership, but in terms of partnership arrangements, in terms of being able to facilitate trade, etc. going forward, one should be focusing east. It's where the capital is, it's where the money's flowing, and that's where the trade is going. So without a doubt, that's a key area of focus for.
But then
for
just a caveat though, Neville, finally, what about big banks like HSBC and Citigroup, for instance, which have a huge emerging market footprint, but also are part of the establishment within Western economies? Should those banks, just by way of longevity, start to think about entering the space more aggressively in Africa, for instance?
Yeah, certainly in HSBC, which I mean is much more of a global bank. I mean, it's got big operations in the US as well as very long established operations in the East, and that should be a player going forwards. They've they haven't really settled down in Africa. They don't have a significant presence in the continent, but something like Citigroup, I think their strategy is still very much up in the air. It's uncertain as to whether it's going to be allowed to continue existing in its current shape and form, whether the too big to fail or the too big to exist kind of rules that the US is pushing through is going to prevent them from growing outside. So something like that, I think a bank like Citi clearly has got far other bigger issues to deal with than whether it's going to expand. But an HSBC, without a doubt, is one that's still focusing on growth in emerging markets.